Today's video is all about talking about the myths of real estate. I'm Lauren, this is Raul. We are with the Schrader Group, and we are going to be discussing the 6 myths of real estate. Shall we dive in?
Let's do it.
All right, true or false, myth number 1.
Ooh.
I should wait to move until mortgage rates fall.
False. The reason being is we could just never tell what's going to happen in the market. If you've been looking at the last 2 years, it's been a kind of roller coaster. I think the big part is figuring out what's right for you and your household situation. If you're paying rent, why are you going to be writing a check to somebody in the Bahamas? It doesn't make a whole bunch of sense. You should put that money to work for yourself. But at the end of the day, it really just depends on what your situation is. There's a lot of great options out there right now. I mean, we're talking about waiting for it to drop. Well, it's already dropped about a point to 1.5 to 2 points, depending on where you're at in the last 12 months. So are we going to wait till it gets even further? Because there's no guarantee it's going to go down there either. But I think getting a trusted professional and kind of know what your situation is, knowing what your outcomes are and what you want to get out of it is very important.
Myth number 2, I'll get a better deal once prices crash.
Yeah, so we hear that all the time, and the truth is history shows that that's not the true statement. And the reason I say that is because we go back to 08, 09 when we actually had a big crash, then yeah, the whole nation felt it, but our San Antonio metro area and surrounding areas didn't really feel it as bad. We felt a little speed bump and got back to living, mainly because of our economy, right? We have a great military inbound and outbound relocations. We have a lot of growth here. We got a lot of different industries here, and we're 60,000 dwelling units behind where we need to be for a metro. So I believe in my mind that we're probably getting back to adjusted rates and adjusted price points, but eventually they'll start to go up. So that whole myth about waiting until it crashes, it might crash in other parts of the country, but I don't believe it's going to crash here in our area.
Myth number 3, I won't be able to find a home to buy.
Ooh, the reality is that's probably the opposite, right? We're in a buyer's market right now. So there's probably over 14,000 homes in our metro San Antonio area, which means buyers have the upper hand. And there's so many different options, right? So new construction's offering so many robust incentives right now to where you're able to capitalize on better interest rates. And on the flip side, the pre-existing market is giving incentives as well. So if we say we're gonna wait until we're gonna buy, you're actually leaving a lot of money on the table. So it's probably better for you to find a house, but it's very important to get with someone trusted with the local expertise, because right now, expertise matters.
Yes, and lots of opportunity out there. Ready for myth number 4?
Let's do it.
I have to save enough for 20% down.
This is one of my favorites. That's a common misconception, and maybe 30 years ago it was real. But the truth is that 20% came in when you have a conventional loan and you're trying to get away with your MIP, mortgage insurance premium, or PMI, right? So that's just a fee that ensures that the loan won't go bad.
Right.
But the truth is you could get a VA loan 0 down. You could get a USDA loan 0 down. You could get a FHA loan 3.5%. And you could even get a conventional for as little as 5% down. So definitely debunked on that. Now there's a lot of programs out there, a lot of assistance out there to help buyers come in the market without saving that big old 20% down.
Myth number 5, renting is cheaper than buying.
You know, in the short run, it might sound like it's an easier barrier to entry, but in the long run, it doesn't really maximize what you're trying to do for your financial situation. And what I mean by that is you can't write off interest on your rent, right? So you write a $2,000 check to your landlord's in the Bahamas enjoying your money while you're over there paying for their mortgage, right? Now, on the flip side, if you had a house, you could depreciate your interest payments. So whatever you pay in interest could go against your taxes. You could depreciate other items a part of your home. So there's a lot of different things, not to mention that every payment you make is actually a little portion of equity gets trimmed off the back end, which means that in the long run, 10 years of $2,000 a month won't get you anything at the end of the day, where 10 years of $2,000 monthly payments might get you $20,000 to $30,000 in equity. So at least you're getting a little bit more for all the hard work that you put into, making sure you're making that monthly payment on time.
Last but not least, myth number 6, a home inspection is not necessary for a new home.
Yeah, so this one's a good one. Even though a new home is built, it can still have issues. And I think the peace of mind is really what we want to capture. But pre-existing homes need inspections too, because let's be real, we're not going to jump up on the roof and evaluate it. You're not going to go, I know you're not going to get in the attic and take a look. But it's that peace of mind knowing that after the dust is settled, all the boxes are open, you're not going to have something catastrophic happen later. So that peace of mind, feeling good about your home because of the inspection, just goes a long way.
Right, because even new homes can have issues, unfortunately. So. If you're on the fence on buying a home, we hope this video helped. Please reach out if you have any questions and subscribe to our channel to learn more.
Absolutely. We're here for you all. Please reach out. Have a blessed day, and we'll talk to you soon.